Alright, let's have a look at the sterling yen carry trade. There was a setup last night that formed on the swing chart, the hourly chart. I'll just quickly point out what I was looking for. And this area here was the 618 retracement of this big swing. See down here, we moved up and then we moved down to the 618 Fibonacci retracement. That's called the ambush zone. Okay, so now that we've identified that there's a retracement, how do we trade it? Well, I don't often just buy the retracement level outright unless I'm absolutely comfortable with the trend. There wasn't really a trend in this one. I did see the level there because it did align with another part of the chart. If we just have a look through here, there was actually some selling through here and some buying here. And then we came down to test and we broke through. So that's hit us right. Those stops have come off through this key level and then hit the 618, which is like the extreme of this swing down. And it's not really that we don't really need to know that. What we need to be aware of is this big 618 level here. So once it hits there, we look for something to tell us to go along. Now, in this case, one of the best signals that I have is a 2-hour reversal, 1 hour being down and the other being straight back up, and that's a 2-bar reversal, and you can see it here. So if I just circle it, this 2-bar reversal here was the buy signal, because really that looks like a giant hammer candle. If I go to the 2-hour chart, that will look something like, it'll have a candle like so, and then it'll have a bigger wick on it. So it opens, moves down, and then moves straight back up. And that's what the best buy signals come from, those kind of reversal patterns. Okay, so let's assume that we are going to make this trade, and we've retraced 618. We've had our confirmation. Okay, there's our confirmation. How do we trade? So we buy on the close of this hourly bar as long as it is above 60 to 70% of the entire length of this first candle. Alright, it's got to be back up inside the range, and this actually was an inside bar on the hourly. Okay, so we take along at the close, it was 209.51, bang there, right there. And we'll just zoom in a little bit more. Where do we place our stop once we've gotten in? The best place to be putting our stop is, I usually put it below the low of the inside bar. If there is an inside bar, I'll have it below here, which is around 208.88. Because this low of this bar here was so close, this one here, that one right there, that big outside bar, I just put it below the low of last night's trading session, which was 208.75, so a little bit below there. So now that we had the signal off the value point, the 618, we've taken along, buy trigger. Alright, our stop is here. This is if things go wrong, we get out of the market with an order, a stop loss order. And then we define our target by a risk reward and also a key level in the market. And how do we do that? Well, if we're risking, say, 66 points or 70 points, a positive expectant system has to have a trigger that will generate more than what it risks. So if you're risking 50 points, you want to make at least 100, or looking for as much as 150, 200, 300 points from your risk. Now, the bigger risk reward trades usually come from breakouts, but because this is a regressive trade, meaning we went against the trend, really, I mean the trend was down on the day and we bought into weakness, so you don't expose yourself greatly to those kind of trades. So we take a trade with, say, a 70 point stop. We're looking for around 140 to 210 points of upside. Now, to ensure that the trade's worthwhile, we need to calculate instantly whether the trade is going to result in a profit, because we had some resistance here at the 50 at 209.87, and then the 38 all the way back up here. We're actually stalling here at the moment. So, you know, if we were to come back down, we're going to rotate within these levels. what happens, risk reward usually just, it happens on its own. It doesn't necessarily have to be a perfect setup. I mean, if you just risked 50 points and hope for the best and held randomly into the close of the week or of the day, or held for 2 days and that was your rule, sometimes you can actually just achieve these results. It doesn't matter whether there's resistance hampering the price movement or a key level. The most important thing is the risk reward on the trade and whether it's worth taking. So we'll take a look at that a little bit more in depth now. So the way I calculate my potential upside targets, let's just look for key levels. So through here we have 211.80. So our long entry down here at 209.50, risk 70 points, and this is the nearest resistance. This is the nearest resistance. And if we were to come up here, that's approximately from 209.50. That's about 240 points. So really, we're making almost 3 to 4 times what we've risked, and that's where I'll be looking to get out. I'm up quite a significant amount of pips now, around 2 times my risk, and I'll be looking to trail stops to at least break even here, and then just letting the trade run. And I look for these hooks here. So I mean, anytime you have a little correction, you can trail your stop up. So let's say we came down and hooked back up, you stop, and then you trail your stop up. I personally don't like to move to break even too soon, but this trade was almost a giveaway trade really. 618 retrace, a 2-hour reversal, the 240-minute chart agreed. I'll just show you what the 240-minute chart looks like and to explain exactly what the candle formation is. So here it is again, up, down. That was a 61.8% retracement of this swing here through here. And this big bar formed on a 4-hour chart, a 240-minute chart. Now that's a buy signal in itself, that bar there. And you can see what's happened, bang, 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 then pop. And that's what we look out for in markets. So the conservative trader waited for the close of the 4-hour bar. He would have been filled at 210.01 or something like that. He's up around 70 points now. He would have had to have his stop, probably 50% of that candle, he would have had his stop loss down here. And I'll get into those more advanced tactics at a later time, but right now we need to be concerned with these type of bars. They're called pin bars or bullish rejection bars. There's one here. Now they don't work every time. You've just got to learn from experience. They work very well in trends off key moving averages. There's so many different ways to trade, but the important thing is this trend line down here has now broken. Now the trade has room to move up, and the target is to this layer of resistance through here. And that's really what trading's about. There's not much more to the setup. You had a reason to get long, 618, you had some confirming price action. Now you're looking for a natural retracement back up to value, and that's going to generate you 3 to 4 times what you've risked. That's trading, and that's pretty much what I do on a day-to-day basis. Hopefully you've all gained a little bit of insight out of that. Any questions, post them in the forum, send me an email. Very happy to help you work out some of the setups that are on the charts. Do keep a lookout on the carry trades. They're pushing up tonight, so something to watch out for in the short term. Just remember those 618 levels are really important, and don't be fooled by counter trend reactions. There's always the chance that prices will just rotate straight back up, and that's what we've just found on the ambush. A very big opportunity. I'm holding longs, 150,000 sterling versus yen. I'll keep you updated. Bye for now.